Hello there everyone, just a quick video today on the tax return deadline, which hopefully you've all heard about, that everyone's basically being given an extra month. So because of the Omicron variant, HMRC were lobbied by thousands of people saying, look, our accountant is off sick, we're not going to be able to get our act together and get our tax returns in on time. So HMRC thankfully have said for the second year running, right everyone, you've got an extra month to file your tax return. So that's great. So what that means is you've got to get your tax return in by the 28th of February, not the 31st of January. So the normal penalties that occur, which is a flat £100, even if you're 2 minutes after midnight on the 31st, that will now apply from midnight on the 28th of February. So you're late on your tax return, £100 penalty. But you've got to the 28th of February now. So also the original deadline of 31st of January was the point at which you pay your income tax as well. So not only do you get your return in, you pay the tax bill. That has also been pushed back. Now, but thankfully, this will help a lot of people, that has been pushed back beyond the 28th of February, and it's been pushed back to the 1st of April. So the tax that you owe, that you would have normally paid on the 31st of January, you've got to pay by the 1st of April, or have a deal in place with HMRC, a so-called time to pay arrangement by the 1st of April. And HMRC are very affable to do this with thousands of taxpayers who understand all the ramifications with COVID and that they can't afford to pay the bills in one lump sum. So basically the rules are, if you've got a tax debt of 30 grand or less, get on the phone to HMRC and do a deal to spread that payment. But it has to be done before the 1st of April, or again, you will be subject to penalties. Now, tax payments and tax returns, new deadlines there. But what doesn't change is interest. So yes, you're not going to get penalized by paying your tax bill, say a month later, say you paid it on the 28th, or even 2 months later, you paid it on the 1st of April. But interest will still start to accrue from the 1st of February. So yes, you may choose to pay it later, but the interest clock will still run from the 1st of February. And the interest rate is quite low. It's 2.75% per annum from HMRC. So people may say, well, I can live with that, just for the sake of being a few weeks late. But that interest clock does start on the 1st of February, even though now they've said you can pay later than that. But the interest starts from that date, as it always did. So some other things to note. What if you miss the 28th of February filing deadline? So coming back now to actual filing the returns. Well, like I said, the £100 penalty kicks in from midnight on the 28th of February. But what if you are delayed even longer than that, and for whatever reason you forget, or you just tardy and don't get your tax return in? Remember that the penalties escalate. It doesn't just stop at a flat £100. So after that £100, you will then be subject to £10 a day for maximum of 90 days. Okay, so that's £900 there, plus the 100 up front, that's £1,000. And then if the return is still late after 6 months, the penalty is the higher of £300, or 5% of your tax bill. So even if you paid your tax bill, but you still haven't filed your tax return, and that does happen, people can be up to date with the payments but not file the return and think, well, they've got my money, so what more do they want? But no, you still can be hit for a big penalty, even if the return is late, but your tax is up to date in terms of you paying it on time. So if you're more than 6 months late with the return, 5%, the higher of 5% of the tax bill, or £300, and then they'll hit you for another penalty after 6 months after that. So if you're a year late, you could be hit for 100% of the tax that's due for that year as a penalty. And you may have already even paid the tax. So this is the penalties for filing late. So for goodness sake, don't file late. Yes, by all means, take advantage of the new extension to the 28th of February, but for goodness sake, do not get your tax return in beyond 28th of February. And for the payment, make sure you pay or have a deal in place with HMRC by the 1st of April. Just another couple of things to look out for is, of course, with COVID grants. So if you are, let's say, for example, you're self-employed and you receive the SEI SS grant, or the various tranches, one or more tranches of that grant, that, remember, is taxable. Unfortunately, it's not tax-free. It's the same with the JRS, the Job Retention Scheme grant. All those government grants are subject to tax. So don't forget to leave it off your tax returns. And also make sure you put it in the right place on your tax return. There are specific boxes on where to put government grants on your tax return. So do make sure that you put it in the right place. So just a quick overview there on the extensions for filing and paying the tax this January. Yes, do put them in the diary and make sure you don't go beyond the new deadline. So if you like this video, please do subscribe. And as always, I'll see you soon.